Inflation has fallen to 3.5% in the year to July, so that's the lowest that we've seen in some time. A lot of that, though, did reflect the introduction of the electricity subsidies in Queensland and West Australia. And in the next monthly print, we'll see those flow through to other states. So we'll continue to see an improvement in the inflation picture. But of course, those subsidies help to reduce inflation now. They'll increase inflation down the track when they're removed.
How will the Reserve Bank look at this, keeping in mind that although electricity and housing prices have come down, food, drink and tobacco prices rose?
That's right. So for the RBA, what they'll do is they'll try to look through things that are temporary, and the electricity subsidies are a great example of that. And they do that by using a variety of different measures. Now, in the quarterly measure, they look at the trimmed mean inflation, but on a monthly basis, that's not very helpful. So what we do is we move out of the CPI what we call volatile items, food and energy, and also travel prices that have been bouncing around quite materially of late. Now, if we do that, and we also take out the subsidies, on our measure at Barrenjoey, we have inflation running at 3.8% in July, which is the same as in June. It's still too high. So I think the message the RBA will take is inflation's still stuck in this persistent zone, and we still need to see further progress towards the target.
Governor Michelle Bullock, on a couple of occasions recently, has been adamant that the Reserve Bank can't rule out a hike. Do you expect the RBA will stick with that line at its next meeting in September?
I absolutely do think they'll stick with that, and I think the Governor will talk to that when she's talking publicly next week. We know that central banks offshore, our global peers, have started to cut rates, and of course we're expecting the US Federal Reserve to cut rates in September. So there's going to be a lot of pressure coming onto the Reserve Bank to follow the leader, if you like. And the fact that we did have this improvement in headline CPI, and next month we're expecting that to fall inside the RBA's 2 to 3% band, means there'll be lots of people looking for the RBA and calling for rate cuts. But the truth is the underlying inflation in the economy is still too high. It's telling us that aggregate demand is still above aggregate supply.
So markets are pricing in a cut later this year. Are you saying they're getting ahead of the Reserve Bank? When will a cut likely be?
So I do think markets are ahead of themselves. Nothing's a certainty in this game, but from our outlook, if the economy evolves as we expect, to take a line off the Reserve Bank, we think they'll start cutting in February. And by then we think they will have 6-month inflation on an underlying sustained basis in the band. We think the unemployment rate will be a bit higher than it is here, and we think the economy will be better balanced.
Jo Masters, thank you.
Pleasure.